All right, welcome traders. Got the start of the new month here. It's pretty exciting. So we got new structure that we're going to deal with. And today we're going to go over the Bitcoin and Ether monthly structure. I'm going to kind of rip right through it. It's going to be a little different than what we've been doing before. So we'll get into it, and I'll introduce some new things that we've got going on. So happy that Bookmap is sponsoring this presentation. I want to go through the particulars on the disclosure that futures and forex trading contains substantial risk and is not for every investor. An investor could potentially lose all or more of that initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and those with sufficient risk capital should only consider trading. Past performance is not indicative of future results. Everything that we're going to go over here today is going to be for educational purposes. We're here to provide you insight, give you some additional awareness. I'm John Slazas from Dharma Capital Trading. If you need to reach out to us, you can get us at info@dharmacapital.trade. My personal Twitter X is JS Services. It's an old school one, and the new X is Dharma Cap Trading. And we're getting ready to start a whole new campaign with the Twitters. Same with our YouTube channel. Dharma Capital Trading YouTube channel has been upgraded, and you will see consistent posts there. We just started a new Substack free weekly report. So every Sunday evening we're publishing a weekly outlook on Bitcoin, and we will be doing Ether as well. And then we've got the Bookmap Discord channel here, so you feel free to leave any questions you have in the Discord channel as well. So today we are going over fact-based trading. And these are our tools. This is our edge. In fact-based trading involves making decisions based on objective data analysis to reduce speculation and subjective biases. So what is that? That's giving you a foundation. With Bookmap, you've got the ultimate microstructure tool to read tape, to read order flow, and you need a foundation before you get in there and read that tape. And knowing when to go into the microstructure and being prepared is what it's all about. And that's what we do for you. And our analytics, we're going to help you standardize your decisions. So we're going to give you that mandate. You need a strategy when you get into the microstructure, so things start to make sense, and that our analytics will provide that, and we'll give you that structure. Our applications will normalize that into your workflow. So we've got an integration with Bookmap, so it'll integrate right into your workflow and the heat map. And then we have a live trade room that we do trader development in to help you optimize your tactics. So we're presenting our analytics, an overview of our analytics, but we're also working with traders to optimize what they do. So with our method, it's always the same thing all the time. And as you prepare for your day, you just go through the process, and we're going to go through that today. And today we're going to go through the monthly structure. So we're going to start high end. Everyone trades at different structures, different time frames. Some people don't get out of the microstructure. Some people don't get out of the macro structure, and they're just trading long-term positions. So we got the start of a new month, so it's a big deal. So we're going to get into that. We're going to define the context of what's happening for the month of November, and then we'll dive into the moment to see what's happening. So the context is going to define what are the state characteristics, what's the environment, what's going on, within the structure for Bitcoin and Ether right now, with the new monthly structure, which will last through the month. And then we're going to look at the specific alignment points. Where does this context change? at what point does the context change, and that's where we're going to see the best liquidity, and that's when we want to really dive into the microstructure to see what the order book is telling us and wants to do. But we can anticipate what the opportunity is, and then we're going to look into the order book saying that, okay, is it performing to the expectation? Is the live current events telling us that this is what the market wants to do or not? And by doing it that way, we're able to, ideally get into some big moves, and that's where we want to be. Small losses, big moves. And so it comes down to an expectation, an if-then statement. If the market is in this state with this structure, here's what's more likely to occur. And so always putting ourselves in a situation where we are with the odds. But and it also helps us to understand that, hey, if we're in a position, then we do a fact check, and we understand that, my position's against the facts. This market's broken structure. I'm long. Market broke structure. I'm hoping. This is what it's all about, to give you that awareness and to help you see that in the order book. So then other things that you're seeing in the order book, you're not going to discount them. And that comes down to, another big plus of having a statistical foundation is that it's going to help you see through some of these cognitive biases that'll have you hold on to trades longer than you should. I got to get out, I should get out, I better get out, I'm going to get out. And then you finally, you have to get out. But more times than not, your body's already told you, get out. And so by adopting, a fact-based trading approach and integrating that into your method, we're not looking to change anything you're doing. We're looking to enhance it. We're looking to improve it. We're looking to give you an edge of what you currently do in your current skill set. And what will happen is, when you adopt an objective viewpoint, it's going to improve your confidence and your consistency and your self-awareness. And in addition, it's going to reduce stress, and it's going to elevate your performance. It's interesting when you know what the odds are, and you are constantly fading those odds. If you come in and you got a position on, and you know that, okay, this position is against what's more likely to occur. You can only do that so many times, if it doesn't work out. You can't. You'll get to a point where you're like, this. Yeah, I know I'm trading against the bias. I know I'm trading against the probabilities. I'm doing it anyways because I'm right. And then you'll do that, and you'll just the stick just gets bigger and hits you in the head, and then you're just like, I don't need this aggravation. And you're not happy that the signals maybe aren't coming into alignment when you want them to, but what'll happen is you'll start taking quicker losses, and then all of a sudden, I'm in alignment. Great. Now I can execute. Now I can increase my size, and then you'll see, and you'll have the confidence to hang on to your trades longer then as well. So these are our applications we've got that, I'll show you today as we apply and go over the long-term structure for Bitcoin and Ether, our playbook, and our price map overlay with our integrations with different charting platforms and with the Bookmap platform. And really what we'll see as we go through this is how it allows us for proactive risk management and how it helps us to anticipate opportunities. And what we're going to go over now is different structures that we're going to use. And so first we're going to take a look at price structure, and then we're going to get into time frame structure along with a little time phase, and then we'll get into our market structure. All right, so what we're looking at right now is Bitcoin, and this is a 240-minute chart. Let's see. Can you guys see this line? Let me change the color here. So what I've done here is I've highlighted, the previous month low and the previous month high, previous month's close, and the previous month midpoint. And so, excuse me, we're going to, so what's happening just based on this, and this is what I identified here is the start of the month. And I'll go to a lower time frame chart in a second. But what do we know about our current, what's happening? Well, there's some interesting things that are going on right now, and this is what we're talking about here is this market structure. Let me move this. I know what the problem is. Just move that out of the way. So, price structure, what's happening, we've got a market that's making, higher move highs and higher move lows. So we have positive price structure. So as we go through the different structures, I want to emphasize that, identifying, reading the market, reading the price structure in the market is kind of the lowest rung of the importance. Value, of a structural point, and especially intraday structure, because what money drives the markets, and the big money isn't so concerned about intraday structure. What they are concerned about, but this gives us as traders, and this gives us insight to how we can trade within the bigger structures, and it's especially if we're just using this price structure to identify, is it trending or non-trending? Are we holding positive or negative structure? Are we not? And so that basically just tells us, hey, this price structure is in a trend mode or it's in a digestive mode. Period. And that's the strength of identifying structure in the market, price structure in the market. I call it kind of the high-low game. That's you just are we moving higher structure or lower structure? Where's the point where we shift? So we've got a market that's holding positive price structure into the end of the month. And if everyone can, there, that's a little better. My OBS looks like we're not able to see everything, but I think that blowing it up there works a little better. So what I've done is, we've got the start of the new month here, and this was the, what's happening at the start of the month. We are, we closed near the previous month high. So this is time frame structure that we're looking at now, and this is a higher level. And why is it a higher level? Because this is what fund managers are mark to market on. Their monthly performance is really what their whole game is. And obviously their annual performance is big, but when it comes down to it, how do they manage their monthly performance is really key. There's a lot of fund managers that just focus on, hey, I'm never going to have a drawdown more than 10%, and you know what? They're going to get into a mix of traders, fund managers and allocators that are only looking for people that don't have a drawdown greater than 10%, and so all of a sudden they're going to be attractive to those people. And so the structure, time frame structure is key, and the monthly structure is one of the most important, for sure. And so that's what we're going over today, and we've got a market that closed near its previous month high, so that's interesting setup. This happens, when this does happen, what's typical? Typical is the market is going to continue on this momentum, and you should see some stabilization above the previous month close. And then we should see a breach of the previous month high, and this positive momentum should just keep going. What can happen here is, if this, so right now what's happening, this is the start of the month here, and we're trading around the previous month close. We're just below the previous month high. So what does that tell us? For the moment, we're potentially in neutral. We haven't made a higher high. And since we are below, we're net change negative on the month, where can the market go? It can come back down to the midpoint. That's just classic, just trading, range trading. You've got this midpoint, which is is going to act like a momentum level. It's the previous month, VWAP, and then you've got our previous month low. So what would be a big digestive trade? Then the market's going to rotate within last month's range, and it's going to use this midpoint as that rotational area. Okay, so what are we doing? We're just building the fact foundation here. These are just truths, right? This is just giving you some insight. And what I did here also is I identified the past 7 days of trading. And so this is what we call our settlement phase. So at the start of the month, which is where we're at now, is our opening phase. And during the opening phase, you think about if you're a fund manager and you're marking mark to market on every month, and that's where how you're getting paid out as well. Then at the start of the month you got all your bullets, you got everything, you can take risks. You're going to stay within all your guidelines, but you have things to do. And as the month moves on, depending if you're up or down for the month, you're going to make adjustments. You might be, if all of a sudden you have a big move, you catch a good move in the first 2 weeks of the month, you're going to lock in a lot of that profit. You're not going to give that away. If you're up, 5-7%, you're going to lock in 5%. Your 5% a month would be huge. So you're going to lock that in, and you're not going. The risk management profit giveback is going to kick in, and it's not going to let you take a loss. And you should think about that for all your trades. There should always be a profit giveback number. So for every day. So if you come in during the day and you have a big morning and you're up X, you should have literally tranches of, at this level I'm locking in this much, this level I'm locking in this much, and you should shut down. If you all of a sudden you pull back and you hit your 50% give back after you hit your profit, the minimum profit target that says, hey, I'm having a positive day and I don't want to give this all back, you should take a break and let things reset if you gave back some of that dough. And so it's the same thing all the fund managers are doing. So what happens is during this opening phase, the behavior of the market's a little different. And you've got people that are going for it more. You've got new allocations that are coming in that start at the start of the month. So what happens during the opening phase is you get this, big, a lot of buy orders come in. Other people want to get out. Let's say they're leaving the fund or they're getting out. They're taking money off the table. That's going to provide selling pressure of orders. And so you'll see what will happen in the opening phase is you'll get a market that looks to range trade a little bit. Looks at how high can we press it to the upside. The buyers are going to come in. And then the sellers are going to come in. They're going to press it to the downside. And that's just a natural factor of the opening phase. And for the monthly, that's the first 7 days of the month. And just the same, unique behavior happens in the settlement. And definitely in traditional markets, settlement's more pronounced. And crypto's the same way because the rest of the world that funds crypto trading is currently on the traditional market time frame, and people have to settle up. People have to set up their margin. Can they carry that position overnight or not? And so all the institutions are doing the same thing, and so you have this period of settlement on a daily basis, because everything's got to be marked to market. You have to have the money in your account. But on a higher time frames like the monthly, it takes more things into account as well, where you've got different expirations that are coming in. You've got allocations that are winding down. Your portfolio didn't have enough of this token in it that you needed, and you need to make sure that it's on your statement for that month that you had that. There's a lot of different things, and at the end of the day, you're winding into the new period, and it creates a specific context. And that's what we're really getting into now anyway, is just context. Because that's where we want to be when we get into the moment. We need to make sure that the order book and the order flow is in alignment with the context of the market. So that's what we're doing now, is we're defining that context. Okay, so that's why I drew this line in here, and this is the past 7 days in Bitcoin, and that is identifying our settlement phase. And I'm going to draw in a boundary here. And let's take this chart to a lower time frame here. Let's see what 30-minute looks like. Table and the monthly midpoints down here. Okay. So what I've done is I've created a rectangle around the high and the low point for the settlement phase. So that gives me a range. And so what I'm doing now is I'm just going to put the midpoint in of that range. So it's basically the same stuff, right? We're just looking at, I don't know if you can see the bottom of this. It comes up on my chart. My OBS isn't showing it. I'm going to assume you guys can see this. So this is just identifying what happened previous month. And now here we are in the current month. And this settlement range is going to give us some insight to how the opening range is going to behave. And so a lot of times, as the opening range starts to get going, it's got a couple, and again, these are just facts. This is just what it is. These are truths. We should know what they are. You should know how the market's behaving. Is the market net change positive on the month or negative on the month? And the same thing is true on this settlement phase. Did the market trade outside the settlement range? Just like the opening range, it's going to be the same thing. And that's what we're going to focus on after the first week of this month. But right now we're in the opening, the start of the month, and we came in to press the top of the settlement range. The market's net positive, opens up. In crypto, the close is the open, and then you've got the markets was holding kind of negative most of the day here today. We had a little spike up. It's going to try to make a challenge to say the previous month high, and now what also comes into play is the settlement range high, so that came into play there, and then we had a pullback from there. Where can it go? And even this was kind of more of a test of the settlement midpoint, test the high point of the range. Now we're testing the midpoint, and before we even came into today, what else did we know? Well, we knew the news, and we knew that we have FOMC coming up. So the expectation is kind of sideways anyways, right? So we're not really expecting things to follow through, and there's it's kind of a difficult time to trade right now to put anything new on, because we've got some big news coming out here. And what the market is performing to expectation, it's kind of churning a little bit, and so just as we have the high low of the previous time frame period, well, on the discovery phase here, during the settlement phase and this price discovery, if the market is not, is trading off this settlement range midpoint, where can it go? It can go to the lower part of the settlement range, which these levels here. And so we can use the settlement range to give us insight to the formation of the opening range. And it's part of the markets. The markets come into a settlement period and they come into an opening period. So that's what we're doing now. Okay, so now we're going to add some market structure. So this is where our work comes into play. Just get this back in alignment. So currently, what do we know? We know that the market's holding above the settlement range midpoint. That's positive. It is below the previous month's close. That's not positive. So we're kind of a bit of a wind up. So now, where is sentiment for this month? So that's our R level, and so sentiment is below the market. So I'm going to throw up the previous period so we can get some sense of how the market has been behaving and where the sentiment has been. And maybe I'll just so sentiment bias is the over-under number. So this is the line in the sand. So any trade period, you can really just take this level, draw it across your chart, and that's going to give you insight to are we positive or negative bias. And so this was last month's sentiment bias. And we went over this before, and how the market moved quickly off of it, came back through it, and we had a lot of churning around it, and then it finally made a move off sentiment. And I believe this was the directional. Yeah, it was the directional. Okay, so what do we know about the market? We know that the underlying tone is positive. We started out, we got positive price structure. Okay, based on time frame structure, we're net change negative on the day, and we're still below. We didn't make a new month high, so that things are in question there, and we are currently testing the boundaries of the settlement range. The fact that we stalled out here. If this market starts to roll, sustain trading below the settlement range midpoint, we're more likely at least coming back down to test these lows. But what we also know about this sentiment bias is that this is where the buying energy in Bitcoin is for this month. So 28,640 is where the real buying energy is. So now let's throw the critical range on. And all these terms and things that I'm going over now, this is stuff that we go over in the trade room, and we have got and when you come on and subscribe with us, we've got detailed tutorials that go through all this stuff. So I'm just going to kind of rip through this now, but we definitely support you in identifying all the structure points. So this is what we call our critical range. I'm going to take off the previous period. I just wanted to show here how sentiment shifted up because we're in this positive trend. But the previous structure is not going to have influence on the current period. It does give you insight to how the market behaves in different structures, because in this situation here, you can see how the sentiment bias last month was within the critical range. It's inside this range, so it's in the middle. So this was a pivotal structure. So in a pivotal structure, this is classic where you're rotating around the midpoint of a pivot and then you break out. And so understanding the context of that structure gives you insight to how do you jump on this train? How do you jump on that breakout? And how do you seeing that in the order book with the expectation? The expectation is, hey, we've broken out. We should see that in the order book in the moment. And when you do, then you're in alignment and it's all good. But so now we've got sentiment below the critical range. So now sentiment's down here. It's not in the middle. So it's different. So it's a different structure. And so what this structure tells us is that the energy is down here, and the energy is actually outside the critical range. So this whole zone here becomes a good, buy area for Bitcoin. So 30,354 down to 28,640 for November. All right, so I'm gonna get rid of that previous period so we can keep our numbers straight. I don't want you guys to think that those are going to have a lot of value right now, but that's what I wanted to show you. Okay, keep messing up my labels here. I do have it fixed to that, and I'll have it installed next week. So now I'm going to add our validation points. So we have some interior price points. This top of the critical range is if we get a breakout above this monthly high, the expectation, especially for the start of the new month, would be for the market to stall out here. So if we do get a new impulse, at least in the first 7 days, we'd anticipate this market. So if you're trading weekly options, this $37,500 strike is going to be a big deal as potential containment. And for this positive momentum, so you have this positive price structure, that's going to start to break down if we fail from here. And then you have this is the real structure low point, right? Actually, this is right here. We had this big spike, and we had a pullback here, and these are all lower than that. So a lot of these lows don't really matter, right? So your risk on price structure is here, and that's coming into alignment. This 32,800 level is coming into alignment with this directional, with the metric boundary of the directional. So this is nice when we get this kind of alignment. So if we, also we have below this point here is when the positive market structure starts to break down. So this is and with the settlement range low here, with this alignment here and this confluence, this is identifying this area as the solid base. So if this positive momentum is going to continue for November, we're going to have this, this thing scale back higher. Market really shouldn't trade below 33,197 basis the Binance perp. And if it does, we're back into, okay, where's the, just looking at the classic, our previous month high, previous month midpoint, and our previous month low point. We're going to, going for that midpoint, and then coming in here, making a play for our sentiment bias basis Bitcoin. So now I'm going to put what we call our validation points on to just get more clarity, more granularity on what's happening here. I'm going to blow this up a little bit. Again, this is monthly time frame, so the structures are bigger. We can take a look at the daily shortly. I don't know if I'm going to have time to get into the ether. I can answer questions later on that. But so what's happening here? So we're going up the food chain. We got price structure, we've got time frame structure. We looked at discovery, where we're at. And so now we can see that the market, that we had this alignment with the settlement range high and what we call our critical range positive area. And so what will happen a lot of times when the market's looking to make a decision, it'll kind of rotate, it'll challenge this area first, and then it'll look to trade back within this directional area. And then sometimes if it can't really make up its mind at all, it'll rotate all the way down to this area, and it'll have this rotation within this these interior critical range levels. If we are, if we're going to maintain this aggressive buying, and we're going to maintain a trade above the settlement range midpoint right now, and then we start to trade above here, and we start to base above here, that'll be our tell that the market wants to shift into trend mode. It wants to take out this high. It wants to make a new time frame high. It wants to take out the November high and have November and make a new high, higher move high, positive trend, and with the expectation for the first week, just really just the first week, because this thing, who knows where this thing can go if it starts to get on a train, would be to stall out around the upside pivot. That's what UP stands for, and with kind of a capitulation high of 38,926 at what we call our critical range extreme, because that is the point which validates a larger breakout. And if we get a breakout of this critical range area, where can it go? It can go what we call a 2A PMD move, or a 2-segment move, up to this UT2, which stands for upside target 2, which is at 44,069. So that's the structure on the upside. We currently have not moved out of this. In this critical range is really a behavioral zone. We haven't moved out of that yet. We haven't validated above 35,204, which is also the settlement range high. This is a key area. We take that out, more likely this monthly, previous monthly high is in jeopardy, and we're going to make and look for the expansion of that opening range and look to set an opening range high. This may be the opening range low. Who knows? If all of a sudden, market doesn't like what Powell has to say, and we have a negative tweak, which is more likely to occur since we've stalled out here a lot of times, and we're also trading negative on the month, and we challenge this settlement range high. The market likes to just test its boundaries, so it makes sense for this thing to have a pullback, and we could get a pullback down to this 33,200 area today. And how the market behaves here is going to be a big deal, because that's going to set the stage for the balance of the month. Because just as with price structure, we're looking for the market to hold higher move highs, higher move lows. With the price map structure, which is what this is called, the price map, we're looking for, and it represents the market structure, which defines the boundaries of the context of the market. We expect it to climb the stairs. It should make higher steps, and just step higher, come down, hold the step, step higher, hold the step, step higher. And that's what we're looking for. And so if it breaks structure here, it's a negative signal, and now we're stepping down. And since we know sentiment's below the market, this is our expectation. Because markets like to go to where liquidity is, and this is where liquidity is for Bitcoin this month. So we have some key points, you know, to make note of: 35,204 and 33,197, you know, 33,200, and we've got 28,640. So, you know, if you're trading spot or, you know, different exchanges, that's one of the issues with trading cryptos, is what price you're looking at, but basically those zones. All right, so let's dial, you know, so now we've got a good sense of what's happening on the bigger scale. So let's flip gears here and just say, okay, so the market's indecisive on the big scale. More likely on a bigger scale, it's telling us it wants to go lower. It looks like we've got this, you know, the settlement range midpoint is kind of big, coming in at, you know, around 34,200. You know, what does that look like basis the daily? I'm going to throw the daily on here. And so now I'm going into the daily time structure, and what jumps out at us is that the sentiment bias for today, right? So we were looking at sentiment bias for the month, which will last through the month, but what the sentiment bias for today in Bitcoin, and that would just last, that's the daily structure, right? So we're going down to a smaller time frame. Basically, it's coming in just below the settlement range midpoint, and this is what we're talking about with when you look for alignment with higher and lower time frames and with the power of that. And so this is really interesting because we've got for Bitcoin today, you know, the sentiment bias was at the downside pivot. So again, a little different structure, still positive. And the upside pivot, the top of the critical range, was in alignment with the CR+. So here we had, you know, monthly alignment from the CR+ with the daily upside pivot and the monthly settlement range high. So let's just flip out, you know, so we've got our big picture, we're going down micro. Let's flip out of the monthly here for a moment, and let's dial in, let's take a look at the daily. And this is your daily workflow right here. So it's all the same process, right? We have, you know, it's the same information, you know, absolutely. We're mark to market. You know, the settlement range is really the first 4 hours of trading, and you've got the opening range, which is kind of the next 4 hours, and the market starts to make decisions. And here we have our time frame structure, and we've got a market that, you know, the close is the open. Immediately it's net change negative all day. What could it do? It's either going to, you know, at this point it's either going to test the high or it's going to test the midpoint. So it tests the midpoint. Rotating around it, you know, this is just giving us some insight. What's happening? What's the expectation? Hey, you know, here, expectation that's going to come down here. It should test a low point. Well, it can't. It pops back above here, you know, and it breaks. And here we're looking at price structure. We had this negative price structure, and at this point, here the price structure broke. We stopped making lower highs, and we did that after we rotated above the midpoint. And then the market is not able to make a lower move low, and we're starting to, you know, now it's flipping the other way. You know, this is a lower high here, so, you know, we're really looking back to this low as the key low, and we get this surge, makes a new high. So this is positive, and it doesn't hold structure, and immediately it's back net change negative. And you can see these are just facts, right? And the markets behave, you know, holding structure, you know, this time frame structure. So the market comes right, but this is the expectation too. The market fails from the can't sustain a trade above the previous session high point, and we pull back to the midpoint. We retest the close. It's classic. You know, was that it? Are we? Is this just a big squeeze and we're going to get going? Well, if we are, then we're going to stabilize above the previous day's close. We're going to go net change positive, and we can't do it. And so, what else do we know? Well, this market probably isn't going anywhere today because of Powell's coming out. So what's it going to do? It's going to go test the lower metric boundary. So it tests the previous day's low point. And now we're back in the midpoint. Okay, so we got that insight. So now let's take a look at sentiment. Okay, well, here, what do we know from the start of the day? From the start of the day, this is where the buying energy is. And from here, so now let's throw on the critical range. So we know that the buying energy is here. The fact that we aren't trading here tells us we might get an opportunity to buy this area, but we did not get that. So let's take a look at those interior critical range points. So this is something that we talked about earlier with the monthly, and the structure is all the same. The beauty of this stuff, and when you learn it, and you can come into our trade room to learn about this stuff, is it doesn't happen exactly, but it's what is they say markets rhyme, and you'll see at the start of the trade period the market will rotate or challenge these interior critical range levels to make a decision. Are we going to go lower? Are we going to go higher? Well, we couldn't validate going lower. We couldn't validate a move into this area. The market stabilized above it. And then with this midpoint here, it gives you another kind of insight, some momentum level. So as we get above here, we can't take out that low. We know sentiment's below the market. It gives us insight, especially this is where you're here, right? And I actually should have this data here. So this is still early, and this didn't give us a lot of insight on intensity of trade. I'd have to maybe adjust my parameters, but it's also a minor level, so that may be the case. But it is nice when you have the VWAP coming into this alignment as well. And with a market that, and then let's take a look at our other application, because this is what is giving us our insight into why we like it. So the Bitcoin perpetual is in a bull trend market state. So this is the underlying context for Bitcoin is bull trend. And so the expectation, higher move highs, higher move lows. Is it performing to expectation or not? So we expect it to hold structure and make positive impulses. And then when we identify the structure of that, we understand that, okay, well, sentiment's in alignment with the bottom of the critical range. That's kind of a power stance for a bull trend, because the market's off the low point of the critical range, and it's telling us that sentiment is positive above this price point. And it also identifies, okay, where's that inflection point where the market needs to breach to extend? And it's telling us that the 35,218 level, the upside pivot, is going to do that. So as long as we're above the DP, the type of risk state is what I call less risk. It's like a it's going to gravitate to the upside, but it really doesn't shift into a complete risk off where when the market's vulnerable to positive events. Until we're above the metric boundary of the upside pivot. And so if we're in that state, we're in that structure, what are the strategy themes? Well, currently with Bitcoin, the market was maintaining, positive structure above the R level. It was maintaining this optimal theme. And then we get a move to the upside, and we get an exhaustive hedge strategy that kicked in. The market couldn't overcome the upside pivot, and we get this sharp rejection back to the downside pivot, but it's back into our sweet spot. So the market has been it's been holding structure. And we're probably going to be in this mode for whatever, at least another hour, and then it's going to make some decisions, and it's going to make decisions here. Why? Because we challenged it to the upside. This structure was valid, it held. We challenged the downside. This is our sentiment bias for the trade period. And if the market's positive, it's going to get back, it's going to go net change positive on the day, which is going to be above the directional. And so basing above here, and since we've already taken out the previous day's high point, which is a positive signal, we could revisit these highs. We're not expecting the market to start trending or break out. The day's pretty much over. Definitely on the upside, because the upside already went, and if the upside was good, it should have gone, and it shouldn't have come back, but it did. So what's more likely to occur is that if we did base above here, it's going to be more firm sideways, and if we can't base above here, we're more likely going to test this area. And what can happen is, since we broke market structure, because we started climbing the staircase here, and then we broke it here, and now we're climbing back down the other way. We're either likely to go sideways into the next trade period, so that would be daily structure is going to shift at 12 midnight UTC time, so I'm in Chicago, that's 7 p.m. my time. Or this hedge theme is going to dominate. And so the trigger on the hedge theme dominating is the market failing here, which is also the previous day's low and daily sentiment. And so now we have this baseline. We have our context, backdrop, we're bull trend. Are we we're not performing like a bull trend should, right? So we're not optimally in an optimal performance. We were, and then we shifted into a hedge theme and then we broke structure. We did hold sentiment. So are we re-engaging this positive trend, or are we going to be in the hedge theme, or are we is the day over and we're into a non-event? So now we can go into the order book and see what's happening, just to get some kind of insight to what did occur. And here's some interesting stuff, and then kind of ran out of time here. Next time we know we did get a late start, so I'll go a little over. I was talking about this the other day, when you're having this intensity of trade and you're having it through the figure, and especially after we've gone through the VWAP. And then, so this is this breakout. So we're getting this happening here, and it's above the previous day's close as well. And then versus having this additional intensity of trade in front of the figure. So a lot of times when this happens, you got these people chasing it, and they're chasing it in front. And a lot of times this is a tell that this is going to contain the market. Another tell of why the market, there's a bunch of tells why we would have exhausted here. One of them being that it's the start of the new month, and we've got Powell speaking today, and you've got news events that are happening. The market's going to want to wait and just see what happens. So it's unlikely that it's really going to make a big move in front of that news. And we also know that the breakout, what's the max risk? We're really above here, because that's our critical range extreme. And you can see how we had this resting paper above the market in alignment with our extreme there. So we had money that's up here saying, okay, yeah, this is this market is going to be contained at the most here. But we also know the upside pivot is a big deal, and then when you get this intensity to trade into that figure, and then it flips, and we get some sellers that are coming in here. That's telling us, okay, that this is, we could see a rejection, and where could we see a rejection to? Back down to the directional. And if this is turning into a hedge theme, then after the market can't stabilize above the directional here, and it retests here and it holds the daily close, it just tells us where, it further defines that this hedge theme that we're in, this corrective hedge theme, and where can it go. Even here, the target is here. Because we know that if this structure holds, where could it go? If it follows through, and go here. And so now they attain that. So that they basically gave us money on the upside and the downside today. And then we got, and again here we got on the upside. So now the market is basically in a wait and see, and you're waiting for the news, and then but basically the numbers are on a daily basis is this 34,700 and 34,100. So this is, if you're teeing up for a move into the next session, or what's going to happen later today, those are the parameters. So we're either, what's more likely, if we're going to hug this midpoint, for the balance of the session, or a positive move is going to be more lackluster. So you wouldn't expect this action to return. You would expect more stop and go above here, because the market already tried to do that. If the market starts to fail, we would expect more of this panic, kind of emotional trade. With the potential of coming down to this 33,000 level on an event. And that comes into alignment with a retest of the monthly directional. So really anywhere in this zone is kind of what the market likes to kind of retest that zone. That's what I went over before. Again, always just looking for the alignment with higher and lower time frames to get you the context. So when you come in here, and so here's the same situation off the R level where you had this is a good example here of intensity of trade, where you have this intensity of trade pushing through and giving us this negative signal below the metric boundary, and then on the retest you had the alignment with the VWAP and the previous day's close to giving us confidence, and we're not getting any support, and we're not getting this intensity of trade of buying here. And so this structure gives us insight that we're in this, and also we know that the market held structure here, and we're in this hedge thing. Where can it can go here, and so that's set up in the order book here, and then we get this big selling pressure into the figure. But we know this is the big buy area. We know there's going to be liquidity here. And so when you're getting this intensity of trade in front of it, and these big sellers, the expectation is they're potentially going to get stuck, and so you don't need to catch a falling knife here, but you're waiting for that intensity to stop. And then when the market qualifies back above this metric boundary, and we break price structure here, that's a tell that we're at least going to get a retest of this CR minus area, if not the directional. And so we're getting that, and we're getting that retest the directional now. All right, so any questions, you can feel free to post, and you can post in the Discord channel as well, or you can email me. Again, here's the kind of the bigger picture, what's going on, where we're at. So this, this 34,700 level is going to be really key right now for Bitcoin. And if you want to, get a better understanding of these tools, come to Dharma Capital Trade, and you can sign up with us. We also are on Substack, and you can get our free weekly outlook there. And you can follow us on Twitter at Dharma Cap Trading. So I hope you enjoyed the presentation. Click like and forward this to your friends. And we'll see you next week. Good trading. Cheers.